Welcome back to our channel, where we will be diving deep into the terminologies that are essential to help you get ready for your financial certification exams like investment funds and Canadian securities. Whether you're gearing up to tackle your exams head-on or just looking to boost your financial vocabulary, you're in the right place. Don't forget to hit that subscribe button and ring the notification bell, so you never miss an update from us. As always, remember to like, comment, and share your thoughts. Now, let's begin. Interest rate risk. Interest rate risk is the risk that fluctuations in interest rates could negatively impact the value of an investor's portfolio. For instance, a portfolio heavily invested in long-term bonds may face substantial losses if there are significant changes in interest rates. International Financial Reporting Standards, IFRS. IFRS, or International Financial Reporting Standards, is a widely accepted and high-quality accounting standard that is employed by public companies in more than 100 countries globally. Interval funds. Interval funds are a type of mutual fund that has the flexibility to periodically buy back its outstanding shares. They are also referred to as closed-end discretionary funds. In the money. In options trading, a call option is considered in the money if its strike price is below the current market price of the underlying security. On the other hand, a put option is in the money if its strike price is above the current market price of the underlying security. The in-the-money amount represents the option's intrinsic value. Intrinsic value. In finance, intrinsic value refers to the portion of a warrant or call option's price that represents the difference between the market price of a security and the exercise price, the price at which the warrant or call option can be exercised. It is essentially the theoretical value of a security, indicating what the security should be worth in the market. In other words, it represents the real or inherent value of the option based on the current market conditions. Inventory. Inventory refers to the goods and supplies that a company maintains in stock. It is a crucial component of a company's assets, and is typically listed as an item on the statement of financial position. Inventory includes items that are intended for sale, production, or use in the normal course of business. Inventory turnover ratio. The inventory turnover ratio is calculated by dividing the cost of sales by the average inventory. Alternatively, it can be expressed in terms of the number of days required to sell the current inventory by dividing 365 by the inventory turnover ratio. This ratio provides insights into how efficiently a company manages its inventory by assessing how many times the inventory is sold or replaced within a specific period. Inverse ETF. An inverse ETF aims to achieve the opposite, inverse, performance of a reference index, net of expenses. These ETFs use various financial derivatives and other strategies to profit from the decline in the value of the underlying index. They are designed for investors who want to hedge against or capitalize on the potential downside of a specific market or asset class. Investment. Investment is the deployment of funds with the goal of generating additional income, growing capital, or achieving a combination of both. It involves strategic decisions to allocate resources and various assets, such as stocks, bonds, or real estate, with the expectation of favorable returns over time. Investment advisor, IA. An investment advisor, IA, is a licensed individual authorized to conduct transactions across the full spectrum of securities. These professionals need registration from the Securities Commission of their operating province. The term is often used interchangeably with registrant or registered representative, RR, particularly for individuals employed by self-regulatory organization, SRO, member firms. Investment banker. An investment banker plays a crucial role in developing the dealer's business, focusing on corporate and public finance, as well as mergers and acquisition services. Their responsibilities often involve advising on financial transactions, facilitating fundraising efforts, and providing strategic guidance to clients in various aspects of corporate finance. Investment boutique. An investment boutique is a specialized retail or institutional investment dealer that focuses on a particular market segment, such as stock or bond trading, unlisted stocks, arbitrage, portfolio management, targeted industry research, underwriting for specific sectors like junior mines, oils, and industrials, as well as activities related to mutual fund distributions or tax shelter sales. Investment company. An investment company is a company that utilizes its capital to invest in other companies. It may engage in various investment activities, such as acquiring stocks, bonds, or other securities, with the goal of generating returns for its investors. The term is often used interchangeably with investment fund, referring to entities that pool capital from multiple investors to make diversified investments. Investment counselor. An investment counselor is a professional who provides investment advice on securities in exchange for a fee. These individuals are typically knowledgeable about financial markets and investment strategies, helping clients make informed decisions based on their financial goals and risk tolerance. Investment dealer. An investment dealer is an individual or company that conducts the business of trading securities, acting either as an agent or principal. These entities are members of FROC, Investment Industry Regulatory Organization of Canada, and play a crucial role in facilitating the buying and selling of securities in financial markets. Investment fund. A fund or company that sells units or shares and invests the proceeds in a portfolio of securities. There are two principal types: closed-end and open-end or mutual fund. Shares in closed-end investment companies are readily transferable in the open market and are bought and sold like other shares. Capitalization is fixed. Open-end funds sell their own new shares to investors, buy back their old shares, and are not listed. Open-end funds are so called because their capitalization is not fixed. They normally issue more shares or units as people want them. Investment Industry Association of Canada, IIAC. The Investment Industry Association of Canada, IIAC, is a member-based professional association representing various entities in the Canadian investment industry. With a focus on advocacy, the IIAC actively engages with regulators and government bodies to influence policy and regulatory decisions. By providing resources, support, and networking opportunities, the association fosters collaboration among its members, contributing to the growth and professionalism of the Canadian investment community. Investment Industry Regulatory Organization of Canada, FROC. The Canadian investment industry's national self-regulatory organization. FROC carries out its regulatory responsibilities through setting and enforcing rules regarding the proficiency, business and financial conduct of dealer firms and their registered employees, and through setting and enforcing market integrity rules regarding trading activity on Canadian equity marketplaces. Investment Policy Statement. An investment policy statement, IPS, serves as the agreement between a portfolio manager and a client, outlining the guidelines and objectives that govern the management of the client's investment portfolio. This document typically includes the client's financial goals, risk tolerance, time horizon, and any specific preferences or restrictions. The IPS acts as a roadmap for the portfolio manager, ensuring that investment decisions align with the client's overall financial strategy and expectations. Investment representative. A person who is licensed to sell securities but is not permitted to give investment advice. Investments in associates. The ownership a company has in another company. As a general rule, significant influence is presumed to exist when a company owns 20% or more of the voting rights of the other company. Investor. One whose principal concern is the minimization of risk, in contrast to the speculator, who is prepared to accept calculated risk in the hope of making better than average profits, or the gambler, who is prepared to take even greater risks. Irrevocable beneficiary. A beneficiary whose entitlements under the segregated fund contract cannot be terminated or changed without his or her consent. Irrevocable designation. A contract where the beneficiary's entitlements under the segregated fund contract cannot be terminated or changed without his or her consent. Issue. Any of a company's securities, the act of distributing such securities. Issued shares. That part of authorized shares that have been sold by the corporation and held by the shareholders of the company. As we wrap up this session, we're thrilled to have embarked on this journey together, exploring the foundational terminologies crucial for acing your financial certification exams, including investment funds and Canadian securities. If you found our insights valuable, remember to show your support with a thumbs up and extend the knowledge to your fellow learners. We trust that these insights will prove indispensable on your road to success.